It's the weekend and you have financial questions that need answering. That can only mean one thing. It's time for Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
Welcome, welcome. It is the Jill on Money show, and we are so happy that you are joining us. This is the program that takes the mystery out of your financial life. I am Jill Schlesinger, CBS News business analyst, certified financial planner. I am joined by my partner in crime, Mark Talercio, best executive producer in the world, also a certified financial planner. So you get the idea. We think that that's a designation that's very important. And we love the idea that we have a new sponsor this year, Facet Wealth, which actually provides flat fee, conflict-free planning from certified financial planners. So the certified financial planner thing, a lot of you guys ask me about it. It really is a way to look at your financial life holistically. It's a designation. It's tough to pass a bunch of exams and you've got to have some experience and do this. But, think of it as really the most important designation in the financial planning industry. So that's one of the reasons we like the folks from Facet Wealth. Also, they make financial planning accessible to lots of different kinds of people because they do goal-based financial planning. And you get a dedicated certified financial planner, not just some random person. So no wealth or account minimums. Facet Wealth will meet you where you are. So go check them out. They're at facetwealth.com. Okay, so let's see. Pretty big week this past week. I know it didn't really, maybe it didn't seem that way, but it did for me because we had a lot of conversation around this next round of stimulus, and I think this is going to be proceeding. This looks like another $1,400 for those folks who earn under 75 grand. It's 150 grand if you're married. And this also includes the payments for dependents. And not only for those kids under 17, the money would go to all dependents, regardless of age, meaning your college-age kids or if you had an older adult dependent. The phase-out of the stimulus is going to occur as you get up to an income of $99,000 for singles and about $200 for married filing jointly. And I think it's going to be accelerated a little bit. So if you got a $1,200 check last year, if you got a $600 check earlier this year, and you're in that range, that 75 to 100 for singles, 150 to 200 for married, if you're in that range, you might not get as much as you think you might. So just pay attention to that. We're also going to see a little beefing up of unemployment benefits, probably $400 a week through August. That's good. It's also for the self-employed and gig workers. Extension of some critical housing and loan benefits, probably through the end of September. And that's good news. We're also going to maybe finally get some aid to states. $350 billion state and local governments, $170 billion for schools, $50 billion for COVID testing, and another $20 billion for vaccines. More help for struggling families. We'll talk about that maybe as we get closer to tax time. But this is a pretty robust number, $1.9 trillion. And we'll see if everything passes as is. They're probably going to be a little massaging, but I think we're on track to get some money out to all of you who are in need. And that's likely to happen. Maybe we get a passage of this in March and hopefully money goes out by the end of March. That would be great. All right. So if you have a financial question, send us an email. It's askjill@jillonmoney.com. That's askjill@jillonmoney.com. If you're on our website, just click the contact button. Our website is very easy, jillonmoney.com. Piece of cake. All right. Steve is writing about early retirement. He says, my question is about retiring early. I'm about to turn 45 and I would like to retire when I'm 55. What are you going to do with yourself? Steve's got $810,000 saved for retirement, $743,000 in a rollover IRA, and he's got 220 grand outside of retirement. He puts a lot of money into all these accounts, obviously, because he's a young guy and he already has like $1.5 million, right? Okay. So question, should I be putting this much money into my retirement accounts or should I be boosting my non-retirement accounts to cover the gap between 55 and 59 and a half. I've heard of provisions in the tax code that do enable people to withdraw money from retirement accounts prior to 59 and a half, but I'm not sure what to do. I think I'm saving enough to retire at 55. I'm not sure if I'm saving it in the right places. Interested to hear your thoughts. Mark, do you have thoughts about that? I mean, Mark and I are so he's got an HSA, a health savings account, which he can use, but I mean, you better be beefing that up because what's your health care plan until you get to age 65 Medicare? So that's number one. And you better be running these numbers to make sure that you are really sure that you can do this. So I think you need to think about health care. I think you need to think about beefing up your non retirement assets because you don't want to be forced to start pulling money out. And, frankly, if you're going to do this, you've got some money in the Roth. I see that, but it's a small amount of money. You've got this massive rollover. So I would not want to tap that because it's going to be taxable income to you. I'm not convinced that you're ready to rock and roll. I need more information. You say that you make $84,000. He contributes 25% of that to his 401k. So he must be living pretty cheap. But what are you going to do with yourself? That's my question. I don't know. I always get very worried about this. And I presume you're single because there's no other person mentioned, but I don't know. Yes. I mean, to answer your question sort of straight up, yes. I do believe that you will be better served by having some money outside of retirement to fund that money. Mark, another thing that I just want to point out is that what is it with these 40 somethings who want to retire early? Do you have a thesis on it? That's a good question. So the question is really about do you want to really retire? Do you want to do something different? Maybe that's something that's important to think about also. Okay? All right. Here's a note from John, who lives in the Seattle area. They want to find a financial advisor, Fiduciary. He says, we looked at the resource section of your webpage. We saw numerous advisors in our area, but how do we find a good, qualified advisor who will be in our best interest? At this point, we do not need someone to manage our money. We just need someone that we can talk to once or twice a year to ask questions, make sure we're on the right track to retire. We enjoy your podcast and the advice you give. We would appreciate your advice on finding a quote unquote good financial advisor. Thanks, John. Well, John, this is what I think. First of all, you've got to ask straight up, are you held to the fiduciary standard at all times? That's number one. But if you want that kind of advice, I would suggest looking at the NAPFA, NAPFA, the NAPFA.org website. Those folks might charge you by the hour, might be easier. And check out our sponsor, Facet Wealth. You can go to their website, facetwealth.com. That's not so much a wealth or account minimum. They are doing financial advice. So you might want to check both of those out. I guess I'll sort of hunt around and see if I know anyone in the Seattle area that I know. I don't know anyone offhand. Do we, Mark? Do we have anyone offhand in Seattle? I'll have to find someone for you. But anyway, thank you so much for your note. And when we return, we are going to get to more of your questions. As always, just shoot us an email, ask Jill at jillonmoney.com, and we will be right back.
Welcome back to Jill on Money, where Jill Schlesinger takes the mystery out of your finances.
You're back. It's Jill on Money, and we are here answering your financial questions. Many of you have been asking about how you can get on the air with us. Well, it's very easy. All you need to do is send us an email, and in that email say, I want to come on the air with you. Mark's going to chase you down. Now, if you resist him, then we're going to read your question on the air eventually. But if you respond to him, well, then you're going to jump the line and you're going to be so happy you did. And that is exactly what happened with Adam. Adam is on the line and we're talking to him from Boston. Hi, Adam.
Thank you so much for having me on. I just wanted to get a sense of. I sent you an email with plenty of details, I hope, and just trying to get a sense of our financial situation. My wife and we recently had a baby, so our situation has changed, and want to just make sure that there's nothing aside from life insurance and wills that we know we need, because I listened to you.
So you wrote to me and you said that you and your wife make about 220 grand a year together. You got some real estate, so you both own studios and now you rent them out, and you've got another new place. So where you're living right now, what is the value of that place?
Like 700,000,
Uh-huh. And a mortgage outstanding?
like 540.
Right now, with the two other properties that you both came into the marriage with, right? These other properties that you're renting, they're covering their expenses basically? Or is one like a moneymaker and one a loser? How does it shake out?
One is making money, and the other one is covering all expenses, truly, including taxes, condo fees, and even maybe a couple $100 a month for turnover and things like that. So I don't consider that a profit, but it's nonetheless covering expenses. And that one, I have a mortgage above 300,000 on it at 4%. It's valued at like 411,000.
Okay. And the other one, how does that look in terms of the financing?
It's considered a co-op, so the financing was kind of weird. So we owe 90,000 on that one and it's at like 5%, and the conservative value on that one would be like 350,000, and that one is netting about $1,000 a month.
All right. So not a big impetus to do anything with that necessarily. But do you think you're going to keep these as rentals? Do you think that we're going to eventually sell them? This is like our beautiful summer home on the Cape, or I'm making this up. But what's the intention?
It would have to be something like that to motivate us to unload them at this point. Otherwise, you don't see a good reason to, and maybe keep it as part of our who knows, like retirement portfolio, if you will. I've kind of justified the only contributing 10% of my employer 401k and then maxing out my Roth every year. I've justified that by having this kind of as part of my projected retirement.
Mm-hmm. Okay, so right now, retirement accounts, just give me a ballpark about how much money you guys have saved and how much are you putting in? You said you're putting in a bunch of money, but you're not maxing them out.
My wife is maxing out her just as of recently, and I am putting 10% in mine, and I have 137,000 in a TSP account, partially in like a target date, and then the rest in the S fund
the C fund, the S fund, right?
And then I have about 95,000 in a Vanguard Roth IRA.
Okay, that's great. You said thrift savings plan. So are you going to be entitled to a pension?
Yes.
Oh, I like that. That's another reason why I'm not going to freak out on you about not maxing your retirement accounts. It sounds like you're putting a lot of money away. When you first sent us an email, you wrote, "But do I need an advisor?" As I go through and hear you talk about this, I don't think you need an advisor at all. I mean, I think you are doing great in terms of putting money away. I love the idea that you guys are, essentially, not 100% maxing out, but you're pretty close to maxing out retirement. The rentals, I mean, look, you're there. You're not like you're managing a property 3,000 miles away. Nothing is costing you money. It'll become a pain in the neck at some point, I presume, or it'll make so much money that you're like, I'll hire a manager for this. Like life's going to probably take precedence. Did you open up a 529 plan?
Yeah, we did, and contributed the $2,000. Massachusetts has like a state tax credit up to $2,000. So that's what we put in for this year.
I think it's great. That's fantastic. So I'm going to give you a few little thoughts. Before we got on the air, you said you'd done your wills and your insurance and all that. So I'm just going to pat you on the head, or you haven't.
I think we're underinsured. So we each have replacement in like 1 year's replacement life insurance. But I know that we're probably a little underinsured.
Given the amount of money you have and you have real estate, I know you have assets, but you're also young. You're 35. Go see what $1 million 20-year term life insurance costs. It's like bupkis. It's not that expensive. And I would just get it. You're both healthy. Just get it. That's all you need. And you're going to be fine. And the wills, you said, were done?
No, we got to do that.
Oh my God, listen to the shame that has happened. Mark, I didn't even shame him, and he shamed himself. He's like, no.
In this situation, I know that usually you recommend spending the money and going to a lawyer or whatever to have something written up. But sometimes, one of those online services are okay.
Look, I think could you do an online service? Just go and you can get started. Go to policygenius.com and go through their module and see if it says it bumps you out, because it may bump you out and say, hey, you know what? You have too many assets or it's too complicated. At the very least, just do that. You're home, and then get your asses in gear and get an attorney.
One other thing that came up while we were going through our assets, and we had talked about, I knew about, but rediscovered that my wife has like 73,000 with Lincoln Financial Group that was invested, I guess, on her behalf by her parents. It's in her name. My thought is, or my sense is, that we should do something with that. For one, it was really difficult to log into the site, so that's reason enough for me to also to maybe bring it over to one of the either Fidelity or Vanguard where we're currently.
Yeah, I would definitely do that. I mean, consolidation works. If it's Lincoln Financial, just be sure to check out what kind of an account it is. It could be an annuity, which means that to move it out will potentially cause a tax event. If it's just straight up mutual funds and it's taxable, fine. But if it's a non-qualified annuity that someone put in her name, then the money that you pull out of the contract might be taxable. The difference between what was put in and what the value is now is all ordinary income. And you should know that. I'm not saying you should keep it in there, but you got to just know it going in.
Well, that's good, because I think that that's what it is, because I couldn't find the damn fund when I was on the website. I did finally log in once, and I didn't have the bandwidth to get back over to try to do that. But I think that that's probably what is going on there.
So here's your problem. That just so I will help you know that what's going to happen is someone threw some money into an annuity. If you have a statement, I know this is like way old school, call. And then you say, what is the tax event if I surrender this annuity? Number one, is there any fee to get out? And number two, what taxes would I have to pay? So you want to know what the cost basis is, and then what is the value today? And it's not long-term capital gains. It's ordinary income. So any money that has been earned since the moment it was invested to when she takes it out, that's all ordinary income that just adds to your taxable income. I mean, it still may be worth it to do it because it's probably an expensive and crappy product, but just to know that. And then one last thing that before I let you go, I don't think you need target date funds. I just think that, you kind of would want to replicate what you're doing in your thrift savings plan everywhere else, just like a broad stock market index, a broad bond market index. Maybe you want to do an international or a small cap, something a little different, but you got enough money now that you can start allocating this yourself.
Got it.
Good?
Good. Yeah. Thank you. Thank you.
Adam, thank you so much for joining us. We really appreciate it. And we wish you the best of luck. If anything else comes up, just shoot us another note, okay?
Thanks so much.
Okay, when we return, more of your questions during the break. Do this. Go to our website, jillonmoney.com, and sign up for our free weekly newsletter. It comes out every Friday, and Mark does an awesome job with that. So check it out. jillonmoney.com, the newsletter. Okay, we'll be right back.
Follow Jill on Twitter and Instagram for more personal finance content. Just use the handle @JillOnMoney. Now, back to the show.
You're back. It's Jill on Money, and we are broadcasting from the Capital One Bank virtual studios. Get it? It's virtual. I know. I love this whole virtual thing. Anyway, Capital One, this is banking reimagined. What's in your wallet? Mark and I may never go back into a physical studio. Remember how you used to say to me, Mark, like, oh, it's so much better when you interview people live. Have you gotten over that? That ship has sailed, says Mr. Talercio, best executive producer in the world. Hey, if you haven't heard me talk about it before, how about right now that you go and subscribe to our podcast? We have a sister broadcast. It's called Jill on Money. And a podcast is so easy. It's just you get to listen whenever you want to listen. And you can get the Jill on Money podcast on Apple or Google or Stitcher or Spotify, radio.com, wherever you find podcasts. If you don't know how to actually download a podcast, then how about you actually figure this out? This could be a fun COVID, a pandemic era thing for you to learn how to do. How do I download a podcast? It's very easy. So check it out. Jill on Money. It's a daily podcast, 7 days a week, and it's real short. It's let's say 12 to 15 minutes every single day. Kind of like this, but shorter. Okay. Let's get to more of your questions. Glenn wants to know which accounts to withdraw how much money from pre and post retirement and what order. Okay. It's a long subject. And he says, I know that's a crazy subject, but it's the $1,000,000 question. And Glenn, a podcast listener, he says he listens while he walks for exercise these days. He says, I'm trying to feed my mind and take care of my body simultaneously. Thanks for all you do. Your insights are appreciated. The more I listen, the more questions I have. Let's try to distill some of these questions, okay? So Glenn and his wife are both 57. They've got a 26-year-old son, only one. And he says the son's on his own and he's financially independent. How great is that? Not looking to leave him an inheritance. He'll probably make more money than we ever made. That's good. Glenn's a sole proprietor. He was forced into semi-retirement due to a downturn in the business, which was severely compounded by the pandemic. I've heard a lot about that one, Mark. A lot of small business owners feeling that way. All right. Glenn says, I'm planning on moving more towards retirement as I've had enough of my career anyway. It's okay with me. My wife is working full time. She makes about $65,000 a year. Neither of us is currently contributing to pre-tax retirement. We have been able to fully fund our Roths every year, including now 2021, though this could be the last year of that. We spend approximately $6,000 per month over the last couple of years, according to our online tracking site. We could spend less, but we don't want to. Our only debt is a $180,000 mortgage on a $280,000 home. Fairly recent refi, 20 years at 3%. We have $2.4 million in Vanguard, Total Stock, Stock International, and Total Bond. They've got a nice mix there, about 55 stock and 45 bond, 50 grand in cash. He says, I've done a couple of Roth conversions, just enough that keeps us in the 12% bracket, one in 2018, one in 2020, about 15 grand each. Should I keep up the Roth conversions to fill up to the 12% or go for more in the next bracket if I can afford the taxes from taxable money? I like having 40 to 50 grand in cash because it's like a security blanket. I don't blame you, and I'm with you. And he says, and I'm guessing that the money that we have socked away pre-tax is going to be taxed at a higher rate than 12% once we get to age 72 and have to take our required minimum distributions. He says, I'm still bringing in $20,000 to $30,000 a year for now, but that isn't enough to keep paying the tax on conversions. The main question is, which account types to draw from at what percentage each when I'll need the money to supplement my wife's income? So she basically has $3,700 a month take home. He says, worst case, I'll need to withdraw about $2,500 to live the way we've been living while she is still working. So this is where it all lies. I really want my wife to retire in the next year or two so we can get out and do more stuff together. We do need to keep our income below $68,000 to qualify for the Affordable Care Act subsidy when we go it on our own because we'll lose health care when my wife quits. I'm getting bored of just doing laundry, emptying the dishwasher while she's upstairs working. Her job isn't too stressful. She's got major flexibility, so it will be hard to walk away from that. And to convince my wife that we have enough saved for her to quit will be tough. And it gives me all the money and where it is. Here's the thing. I want to tell you the truth. I think it's crazy for you guys to think about having her retire. She's right. You should not do that. I know you've got a bunch of money. You won't run out of money in retirement, but this is a long period of time, okay? A really long period of time. And if you think about it this way, if you think you're 57 now, right? Let's just say that you live till you're 95. I know that seems like, or whatever, let's say 35 more years. 35 years of unemployment is a long time, okay? A really long time. And if you think about, this period of time right now before you can claim Social Security, you could really actually spend a bunch of money and you can spend down a lot of this asset base that you have created. This is a little COVID related, probably. And, frankly, at this point, it's hard to make a decision when you're in this mindset. I would not convert more money into your Roth right now. I think up to the 12% is just fine. I wouldn't have her work any less. I would have her continue to work. And what you're trying to do is you're trying to delay tapping into all of this money. And the longer you can do that, the better. I mean, look, $2.4 million, a lot of money. You'll have I don't know, 60 grand a year coming in ish, without running out, but some of that's taxable. So I feel like you may be rushing to retirement at a time when it's not like you don't have enough information. I feel like you should not be making this big decision amid COVID because I think that we're all off. That's what I would say. It's almost like saying you don't want to make a big decision right after someone dies. You don't want, you don't want, oh, I'm going to move. I'm going to do this. I'm going to do that. Like, I just think you have a lot going on and it may not be worth it for you to be making this kind of decision right now. I'll tell you what, I'm going to come right back from the break. I want to talk a little bit more about this question. You're listening to Jill on Money. When we return, we're going to try to figure out how to walk this back a little bit and try to make a better decision about retirement. Okay? Jill on Money. We'll be right back.
If you've missed any part of a show or want to check out a past show, go to JillOnMoney.com for more great personal finance content.
You're back. It's Jill on Money. And I'm trying to think about this last question that we received about the 57-year-old couple thinking about retirement. This is Glenn. I'm trying to think about this through the break, right? And having $2.4 million, a ton of money. It's great. What I guess I'm saying is that the feelings you have amid a pandemic where you're stuck at home, where you're thinking about like, I'm doing laundry, my wife's up in the, it's not like a realistic appraisal of what the next 5 or 7 years could look like. So here's what I think you ought to be considering. Number one is you can keep doing Roth conversions that can keep you in the 12% bracket, but don't go crazy. And frankly, if you can get a little bit more money coming in, that's great, but it's actually more important that you keep your money liquid. I like your 50 or so, $1,000 in that emergency reserve also. So that's number one. When you are actually ready to tap accounts, let's put the Roth in the back of the line. We don't want you to pull the Roth money out. We want to make sure you have enough money to pay for your bills and expenses, as much out of cash flow. Then with Social Security, you should be okay. But, between now and Social Security, you're going to have to use money from your retirement accounts. But again, because you have to keep that income below $68,000 to qualify for the Affordable Care Act, it may be rather interesting for you to consider whether or not it makes sense for you to get some sort of part-time job where you get health benefits. And what about your wife? Doesn't she get health benefits? I don't think you need to be putting a ton of money away into pre-tax stuff. And I don't think you have to be obsessed with pre-tax conversions. What I really think you might actually benefit from is doing some longer term financial planning and coming up with a game plan for between now and between age 65, right? That's a very critical period. And to make that determination, you're going to have to either do this yourself, pound on the numbers, or go work with somebody. I do think that we often are making these big decisions during very dramatic times, and it may not be serving us well. By the way, just a shout out to all of my friends at CBS who have been sending me countless numbers of messages, emails, and texts about what should I do about my stock? I put this out there for people just to learn a great lesson. I don't own CBS stock, even though I work there. I don't own a bit of it. However, this stock went on some crazy ride over the last couple of years. It was an accumulation of an amalgamation or a marriage of two companies, Viacom and CBS. They got married, and if you look at the chart of the stock, it's completely insane because they get married, and then last year the stock dropped to a low of about 12 or 13 bucks. At which point, all my friends at work started freaking out, and they're like, "Oh my God, I was at 40 or 50, and now it's at 12. What do I do?" And now these same people are like, "Oh, maybe I want to hang on. It's like it's 64, 65." Okay, guys, for everyone listening who's endured owning a stock, an individual stock, and it can be a stock, it can be Bitcoin, it could be anything. When you have a game plan, the game plan does not alter based on the price of the stock. So if you have restricted stock units and they're available to sell, just because the stock's at 64, you don't hang on. You sell it and you move on. And you'd be disciplined about not keeping too much money in that one stock. And if you have been on the roller coaster ride of being up, down, and now up again, don't be a pig. Take the money and run. Okay? Okay. This is Kevin. He's a law enforcement officer in Washington State. He's part of the state retirement system. He's going to retire in about a year, and it'll give him 34 years of service. The pension plan will pay 2% per year of service based on my highest 5 consecutive years. And he's got a survivor option. So he's obviously married. And he says that survivor option, 2/3 survivor option, would pay $7,400 a month. Here's the question. I have the option of purchasing up to 5 additional years of service credit. If I do, it would cost $233,000. It would increase the monthly benefit by $1,100 a month. That would give us $8,500 a month. We could use the money from my 457 account to purchase the service credit. The money is guaranteed until both my wife and I pass. If all the money is not used up by the time we pass, the remaining balance goes to our estate. Is it a good idea to purchase the 5 years of credit? I'm not sure where else I could get a guaranteed return of $1,100 every month, right? 1,100 times 12 months on a $233,000 investment. Yeah, but I mean, do you have to pay tax on that? Do you think they let you do it pre-tax, Mark? If you can do it pre-tax, it probably does make sense. How much money do you have in the total plan? That's number one. Okay. If this leaves you with very little money in investments, then I'm not so sure. But so I need a little more information. And he says he also has different options for survivor benefits. He can do 100% survivor. He can do a joint in 100%, a joint with 50%, joint in 66 and 2/3. My wife will likely outlive me and does not have any pension. I was thinking the 66 and 2/3 because she will have fewer expenses after I pass away. What do you recommend? Yeah, I think that that's fine. I do think that's fine. I'm interested. I am very much interested in finding out a little bit more about how much money you have set aside. So if you could follow up with us, that would really be great. I don't want to deplete you of having any other liquidity. So let us know about that, and we can for sure give you the high sign on that. Okay? All right, you are listening to Jill on Money, and we are answering your financial questions, but only if you send them to us. Our email address, askjill@jillonmoney.com. AskJill@jillonmoney.com. We'll be right back. You're back. It's Jill on Money. This is the program that tries like heck to make your financial life a little bit more understandable. We want to take the mystery out of your financial life. So send us an email with your questions. It is askjill@jillonmoney.com. If you're on the website, if you're on the jillonmoney.com website, then all you need to do is just hit the contact button. So this is a question from Erica, who is 45. And Erica says, I have a traditional IRA and a 401k, approximately $500,000 in each of them. I've got no debt, no mortgage, about $150,000 in cash, $150,000 in cryptocurrency. It's a long-term hold. This is very prescient because next hour we're going to talk to a crypto expert. Okay, back to Erica. She lives in California. Her adjusted gross income, $220,000. And here we go. I feel like I should start moving some of the money out of my traditional IRA to a Roth, but I also pay so much in tax. I only can claim the standard deduction. No way to actively reduce my tax liability. Your thoughts? Well, I mean, do you have, I guess the question is, are you asking this because you have a 401k Roth option? If that's the case, I would do it, actually. I know that's a drag because if you're single and you make 200 grand, you're in the 32% tax bracket and you live in California, that's a high tax state. I get it. The answer is, you have a lot of money, you're saving a lot of money, but a lot of it is it's just in traditional assets. So maybe the whole reason to do it is just to diversify the type of account that you have. That's it, Erica. But don't drive yourself crazy. You're doing a great job, whatever you decide. Truly, you've done a really good job of saving. Love to know where you got in on your crypto. Very interesting. And on the crypto front, as Bitcoin traded above a market capitalization of $1 trillion recently, we are so happy because we've got a fantastic interview with Dan Roberts. He's an editor at large at Yahoo Finance, and we are talking all about Bitcoin next hour. What fun it will be. I'm sure this will conjure up a lot of questions. Feel free to send them to us. Ask Jill at jillonmoney.com. When we return, it's our interview about Bitcoin. It's your Bitcoin boot camp coming up next. We'll be right back.
It's the weekend, and that can only mean one thing. You're listening to Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
You're back with hour number 2 of Jill on Money. And boy, do we have a great guest for you. Maybe you guys have been following the journey of Bitcoin. Just to put this in perspective, ladies and gentlemen, it's been crazy. A couple of years ago, we were talking about Bitcoin and, it had gone up. I think it hit a high of around 19,000 in 2017. It came down. It went back up. It went back down. This year, we started the year at around 36,000. And within weeks, I think 6 or 7 weeks, Bitcoin went above 55,000. That meant it had a market valuation of over $1 trillion with a T dollars. That is some ride. But then I went back and looked at the first time I actually ever covered Bitcoin. It was at $13, Mark. Can you believe it? I did. I looked it up. I was like, oh, look, I did this segment on WCBS television about Bitcoin in the beginning of January 2013, and it was at $13. $13, ladies and gentlemen. Yeah. Okay. So no regrets. Nope. I'm all happy. All right. So back by popular demand, we have brought Dan Roberts onto the program. He's the editor at large at Yahoo Finance. He was a very early journalist on this Bitcoin beat. We're going to learn a little bit about the origins. Dan will explain it all. Here is our interview with Dan Roberts. How did you get on this beat? Because I think, didn't you start in sports?
So I actually cover sports business still, but crypto, it comes in waves, right? The interest level. But I've been covering Bitcoin and blockchain in this space since 2012 when I was at Fortune. Of course, that was very early days, but it's still arguably early days, even though it might not seem that way to people. People look at the price surge right now and they think, oh, I'm very late, but who knows where it could go. So it's still a very nascent new technology. It's only been around 11 years. So yeah, I've been covering it since 2012, and there have certainly been moments of great mainstream interest and then moments where it pulls back and you don't hear about it as much. But I think at this point, the consensus, regardless of what the price does, is kind of, this isn't going away. Bitcoin exists and it will continue to exist. And something you used to hear from skeptics is, well, what if it goes to zero? Don't listen to anyone who says they know exactly what the price will do next, but It is not likely to go to zero ever. It is sticking around.
So, all right, let's go back in time. For people who are not familiar with cryptocurrency, this is just think of it as a digital currency that started after the financial crisis. So, talk a little bit about the roots of cryptocurrencies and how they came to exist.
Absolutely. And by the way, I actually say, even though the term everyone uses is cryptocurrency, I actually say a more accurate term is just digital asset, especially because amid the conversation around Bitcoin, people say, well, it's really not a currency. There aren't many places you can spend it and use it to pay with. And of course, as the price goes up, most people don't want to spend their Bitcoin anyway. They want to hold on to it as an investment. So I think of all of these as digital assets. But you're right to ask about the roots. And it did come around after the crisis, although the original white paper was in 2008, before the financial crisis, or amid the crisis, October 2008, by someone or someone's using the pseudonym of Satoshi. And they called it a peer-to-peer electronic cash system, which is another reason that it's interesting that all the Bitcoin obsessives and devotees now say it's okay if you don't pay with it or use it as a real currency. It's an investment. Well, if you look at the original white paper, it was meant to be used as cash. So maybe we've gotten away from that. But it is a peer-to-peer currency, and all of the transactions, you can view them on a decentralized ledger in the cloud, and you can download that software. You can quite literally look at the Bitcoin blockchain live in real time, and it's ping, 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 and you see all the transactions. And quickly, a way I like to explain the blockchain is sort of like a library card, and not the card you use that you hand over to check out the book, but the little insert in a library book that lists everyone who has taken out the book. The blockchain is quite literally a series of blocks, each block being a bundle of transactions. And expensive, increasingly large computers and mining rigs get the privilege, as they solve complex computations, to record and upload those bundles. So when a mining rig wins the contract to upload a bundle of transactions, a block, it adds a block to the blockchain, and the miner gets a small reward in Bitcoins.
You know what I love about this? I'm sorry to interrupt you, is that the idea that you have a library card in the back of a book is very old school. And I feel like you're almost too young to remember that, but I so remember that. And it is like the best analogy that I have ever heard about digital stuff, because it really, for old people like me, because now it's like, oh yeah, right. I know everyone who took out this book before me. The person comes next will see that I had taken out this book. Not you personally, but some series of numbers.
And in fact, Jill, what's very cool, the first time you use Bitcoin, even if you're a newbie, you don't think you understand it, if you buy or send someone a small amount of Bitcoin, you get a link. It spits out a link and you click it and it shows you there's your transaction on the blockchain. And you can look at it and see, 3 mining rigs have confirmed this transaction. That's sort of a cool little jolt you get when you see that recorded.
And I think that when a lot of people thought about Bitcoin or any digital asset way back when, there was a sense of, we don't trust the banks. Yep. And 10 years or 12 years later, that's not the essential thesis anymore, is it?
Yeah, that's right. And to go back to you asking about the roots, a lot of these original Bitcoiners or, crypto crazies, whatever kind of fun term you want to use for these people who've been, in it since the beginning, they're huge flag wavers. This is their big passion. Is at the beginning, many were libertarians. And the whole appeal was it's unregulated. It's outside government control. There's no middleman. It's decentralized. And as a result, in 2018, when I last joined you, there was a little phase, and I just recently wrote about this at Yahoo Finance. Your listeners might want to check it out. I wrote about how since the beginning of Bitcoin, there have been a number of different narratives, different phases. There was this era, then there was this era. So one phase was banks and Wall Street institutions starting to say, well, we're interested in blockchain. We're going to use blockchains and we're going to create our own blockchains. And side note, that's something people should understand, that there's not one blockchain. There's the Bitcoin blockchain. But now there are a number of other forms of blockchains, that is decentralized ledgers on which digital tokens can run. And so banks would say, we're going to put it on the blockchain, or we're going to make our own blockchain. And those libertarians who were in it because they loved that it wasn't government controlled, there was no middleman, they sort of said, well, you're defeating the whole purpose, because a closed blockchain, or the term is permissioned, where, JP Morgan said, we're creating our own JPM coin for our clients. Well, you can only access it if you have a password from JP Morgan and you're a JP Morgan client. That defeats the purpose. The whole idea of the Bitcoin blockchain was it's permissionless. Anyone can see it. Anyone can access it. There's no gatekeeper. So that was one narrative. Now, today, more than ever, you have Wall Street firms starting to say, actually, we're interested in Bitcoin too. In 2018, it was blockchain without Bitcoin. We don't like crypto, but we like blockchain. Now they're saying, actually, we're interested in Bitcoin as an investment for our portfolio.
We'll get back to our interview with Dan Roberts after a brief moment of a few little messages. Between now and then, what we would hope you do is go to our website, jillonmoney.com, and just bookmark it. Bookmark it so it's there for you. You can always go back later. If you've got a financial question, send us an email. It's askjill@jillonmoney.com. We'll be right back.
Welcome back to Jill on Money, where Jill Schlesinger takes the mystery out of your finances.
You're back. It's Jill on Money, and we are talking about Bitcoin with our guest, Dan Roberts. Before we get back to that interview, maybe you're thinking about Bitcoin. Maybe you're wondering how this kind of incorporates into your life, into your real life. Well, one thing that you should know is that if you're working with a financial advisor, financial planning firm, you may be able to incorporate something crazy like a Bitcoin investment into your game plan, but only if you have a game plan. And that is why I am lucky to tell you that we have a great sponsor for 2021, Facet Wealth, which really does full-blown financial planning for anyone. They've got flat fees, no conflicts. They give you a certified financial planner, a CFP, who's a fiduciary, and they do not charge anything based on a wealth or an account minimum. Facet meets you where you are. So go check out Facet Wealth. Their website is facetwealth.com. All right, so we're going to go back to our interview with Dan Roberts. Something really has changed from maybe even just 5 years ago when Dan was talking about Bitcoin and other digital assets. And what we're going to do in this segment is try to explain the shift that has occurred. And it is pretty interesting. And it really may be the true reason why Bitcoin has soared. Here's more of our interview with Dan Roberts. There's been people who said, it's a scam or it's a bubble. And now it does appear that there has been a real capitulation. And now they're all in it again and bought in pretty wholeheartedly. Is that what allowed the price to surge? I don't know, it was 40,000 last year. What was the high last year?
So last year, it just barely got to 20,000. And then in the first 5 days of the year, it soared to 30, 35, 40. Now, a big caveat here, Jill, and this even makes it a little more complicated. Unlike stocks, where, Tesla is listed on the NASDAQ and that's it, and that's where you can trade Tesla, Bitcoin is traded on many, many dozens of different exchanges. There are multiple cryptocurrency exchanges where you can buy, sell, and trade Bitcoin and other cryptocurrencies. And as a result, there is never just one price. There are some exchanges that spit out an average where it's a blended average. But, right now, CoinDesk's index, and that's just a news site. You don't actually buy Bitcoin through CoinDesk, but they might say that the price right now is 34,000. And then you look at Gemini. That's the exchange launched by the Winklevoss twins, who were made famous by Facebook. And on Gemini, it might say 34,800. It never varies that much, but as a result, you have a few exchanges that will tell you that the high back in the 2017 peak was 20,000. Most exchanges never had it hitting 20,000 in 2017. They had it getting very, very close.
I just got a note that was sent to me pretty recently, I guess in the last couple of days as I'm talking to you, from the British regulator, the FCA, the Financial Conduct Authority. That's like the SEC of Great Britain. Okay. And it says here that with all high risk speculative investments, consumers should make sure they understand what they're investing in, the risks associated with investing, and any regulatory protections that exist. And essentially, the FCA says this is pretty risky stuff, and you better be very careful before you actually invest in a cryptocurrency or a digital asset. What is your reaction to that?
Well, you should. I mean, it's sort of self-evident. And as the price surges, you're going to see those warnings. You're going to see, the SEC, which also does a little bit of consumer protection as its job, issuing warnings about putting too much money in cryptocurrency. I mean, the sort of mantra is you should only put in what you'd be comfortable losing, right? And not freak out. And in 2017, there was a lot of people who lost their shirts. I mean, there were a lot of young people who bought in amid the hype. They bought high, and then in Feb 2018, Bitcoin lost 65% of its value, and they freaked out and they sold at a loss. And you look back at that now, and if you had just held on, because anyone who bought Bitcoin, even if you bought it as late, quote unquote, as say 2015, you're way up, through the roof up, if you've held on. Now, this is also a good opportunity for me to answer. You asked about, why the price surge now, and I didn't fully answer it. The difference now, we've talked about Wall Street. And we've talked about how a number of influential hedge fund investors have changed their tune. And banks and investment firms, they're starting to say, we think it's worthwhile to have maybe 2% of your portfolio in Bitcoin. It's a small, modest allocation, but it's something. But in addition, there have been a number of other factors that all happened at once and really fueled this. Another big one was PayPal, which, talk about a big, well-known consumer-facing payments name, announcing in October, when, by the way, the Bitcoin price was already on the rise, but not as dramatically as happened after this in November and December. PayPal announced in October 2020, we are going to add Bitcoin and a couple other cryptocurrencies to our PayPal and Venmo, which PayPal owns, digital wallet. You will be able not only to buy Bitcoin inside PayPal, but if you want, spend it. Pay with Bitcoin at the point of sale at an online merchant. Now, again, I don't think people are going to want to do that because as the price surges, why would you spend it? You'd want to hold it. But PayPal buying in was seen as, here's a well-known mainstream company that is giving its imprimatur and at least showing we believe this is a worthwhile asset and we're going to add support for it. And I think that really helped. So there was a convergence here of a number of things. And quietly, Visa is another name. Visa has allowed 6 or 7 different Bitcoin startups to come out with Visa-branded Bitcoin rewards credit or debit cards. So normal debit cards, spend your money, but instead of airline miles, you get a small fraction of Bitcoin.
Can you talk a little bit about this craziness where I've even heard, in fact, I heard Kara Swisher say this on her podcast, where she said she bought Bitcoin a million years ago. She has no idea where it is. So what's the problem there? I mean, that seems to be like a pretty major issue for people like me who can, hardly remember where my keys are, although I do know what keys are. So that's good.
Right. Well, when we talk about losing your keys, as they're called, and it's sometimes 20 different words, a recovery phrase, think of it as you've parked your car somewhere in the world. You don't remember where you parked it, and it doesn't have a license plate on it, and you've lost the car keys. That's it. The car exists somewhere, but you can't access it. That's the way to think of your Bitcoin. It's not in an account that you can just go visit the account. It is parked on the blockchain, the Bitcoin blockchain. And if you can't access it with your keys and spend it or send it, that's it. It will sit there. No one else can get it, but you can't get it. Now, here's the big don't worry to all that. That's why there's such an appeal for mainstream exchange sites like Coinbase. You just buy through Coinbase, which almost everyone in the US who is reading about it, doesn't know much about it, but decides I'd like to buy a little bit, they're likely to go to Coinbase. You don't have to worry about your keys. Coinbase acts as the custodian. Now, of course, what the diehards say is, well, what if there's a hack? We don't trust Coinbase. And also, Coinbase has had a series of outages during major price moves. And people get very angry. Oh, my goodness, the price is crashing. I want to sell. And Coinbase is down. So with those problems, some obsessives and people who've been in the industry and understand all this, they say that's why you should store your keys on a hardware wallet, which basically looks like a little fob. That New York Times story that's being shared around, those are people who had their crypto on a hardware wallet. And that way, you're not trusting Coinbase. But boy, if you lose your keys, that's it. So that's why it makes sense for newbies and anyone who doesn't want to worry about keys to just buy through a trusted exchange. And then you're never going to lose it because it's Coinbase that has your keys.
What do you think is going to be the implication of sort of the ability for people to say buy Bitcoin in a 401k or an IRA account? Is that going to happen, do you think?
Well, I think that there will be options, but a lot depends on the pace of regulation. And regulation is about to kick into high gear. Now, of course, when we talk about regulators like the CFTC, SEC, high gear still doesn't mean much. I mean, they infamously move at a glacial pace. But there already are a number of kind of newish, nascent workaround options like that for investing in Bitcoin, but they're risky. They're not FDIC insured.
We'll get back to our interview with Dan Roberts in just a moment. Hey, during the break, remember I told you last break you should just go ahead and bookmark the JillOnMoney.com website? Well, go to the website and sign up for our free weekly newsletter. If you haven't done so, Mark puts out this great stuff every single Friday. The Jill on Money free weekly newsletter. Sign up at our website. We'll be right back.
Follow Jill on Twitter and Instagram for more personal finance content. Just use the handle @JillOnMoney. Now, back to the show.
You're back. It's Jill on Money. And we are so lucky because we had booked this guest earlier in the year when I was shocked at Bitcoin rising above 35,000. Now, recently, it's gone above 55,000. So a lot of attention about Bitcoin. And that is why I'm so happy that we've got Dan Roberts, editor-at-large of Yahoo Finance. In this part of our interview, we're talking about the regulation of Bitcoin and other digital assets. Who's doing it? What does that mean for the future of Bitcoin? We talk about it. Here's the end of our interview with Dan Roberts.
There are Bitcoiners who love that it's unregulated, but as it goes more mainstream, the big Wall Street investment firms and regular, retail investors, they want regulation. And regulation is coming, baby. And the question is it good for the space or bad? Will it impinge on innovation? Or will it allow it to go more mainstream? So I'll give you an example. We just had a guest on our Yahoo Finance live shows from a company called BlockFi. And of course, Coinbase is one of BlockFi's investors. BlockFi is a savings account, but they pay you your interest in Bitcoin or in any one of 10 other cryptocurrencies you choose. You can get it in Gemini dollars if you want. You could get it in Ether, which is the digital currency of Ethereum and the number 2 largest cryptocurrency. But it's not FDIC insured. So there's a risk there. I mean, if you want to quickly accumulate Bitcoin and it's a way to get more Bitcoin without just outright buying it, you can set up an account with BlockFi and deposit a bunch of money with them, and then you'll earn interest in Bitcoin. But you might not trust it because it's not like, Ally or Marcus by Goldman Sachs or Chase. It is regulated by the NYDFS, the New York Department of Financial Services, because its partner, its exchange, is Gemini. And Gemini is regulated by NYDFS. But point being, a lot of these newish platforms are offering various investment vehicles, ways to get into Bitcoin without just outright buying Bitcoin. But there's a lack of regulation, but increased regulation is coming. So we'll see how fast it moves and how fast it goes mainstream. It depends. What's your appetite for risk?
Is the idea of future inflation also some fuel for, gold already ran, now let's do Bitcoin? It becomes another, could it become another, I'll put 2% in as my crazy inflation / if the world goes to pot trade?
Absolutely. And some would say it's already there. Now, of course, it's very volatile. But if you actually look at a price chart of Bitcoin, and we have, price chart on Yahoo Finance that'll do this for you nicely. If you expand out and click 5 years, you'll see that even though there have been 2 or 3 what look like on the chart big crashes, adjustments, corrections, in that 5 years, it's up huge. The line kind of goes up, up, up. Then in 2018, as we've discussed, it staggers down, but not all the way down. Then it goes up, up, up again, and it's spiking right now. Now, of course, that suggests that sometime this year, there's going to be a peak and then a big correction again. But my point is, over time, it goes way up. It has gone way up. It has been a very good investment if you were to buy it years and years ago. If you're willing to buy some and hold on to it, and you're not speculating and you're not short term, then it has been historically a good investment. I can't speak to the future and what happens next, but that is what people are saying. A hedge against inflation, maybe you put 2 to 5% of your portfolio in. And of course, the pandemic, related to the idea that it's a hedge against inflation, the pandemic has been very good to Bitcoin, because the argument is that as you look around and governments and central banks are pulling various levers, the Fed, and issuing stimulus checks, all of this serves to reiterate Bitcoin's appeal as quote unquote digital gold. They can't just print more of it. There's no quantitative easing with Bitcoin. There's no centralized power that can cause inflation. Bitcoin's supply is capped at 21 million coins, which of course we're not there yet. So new Bitcoins are still being created, but there will never be more than 21 million. And so that is its appeal. It's scarcity.
So I don't want to go crazy with this for sure. I really don't want people to go, wow, I want in on that. But, I can't help but go into my old commodities trading life and think, I could see how someone wants to sort of dip their toe into this. So our message, as you conclude, would be to be careful, to only allocate the amount of money that you don't really care about. So you think the safest way for people to do this is through one of these exchanges, whether it's Gemini or something else, so that they don't have to worry about, misplacing their various passcodes, right?
Yes. I think if you want to dip a toe in and put a small amount, maybe you say, I'll buy $1,000 worth. And by the way, if you had done that a month ago, you'd be way up. You'd have 2,000 and change. Best to use a US-based Bitcoin exchange site. And there are a few. You mentioned Gemini. I talked about Coinbase. There are a couple others. Binance is the biggest one in the world, but it is not based in the US and has had some issues at times. But just let them hold on to it. And again, be careful, as with any investment, and I'm not even, by the way, Jill, necessarily telling people to buy some. We don't do that at Yahoo Finance, but I would say this. A colleague of mine, Rick Newman, way back in the 2017 surge, he wrote a fun post that just said, it's fun to own Bitcoin. I mean, forget whether, it's your savings on the line and boy, it better go up or I'll be in big trouble. Even if you just put $10 in, because you can buy a fraction. And I think a lot of people don't realize that. They look at the price and see it's 35,000. They say, well, I don't have 35,000. Well, you can buy $1 worth of Bitcoin. Rick was writing about the fact that, it's gone way up, but he's not selling the small amount he has. This was back in 2017. And he said, because it's fun to have a little skin in the game and look at the price and go, wow, this is crazy. And then it might crash, fine. Or it might surge, fine. But it feels like, being at the forefront of something cool and exciting.
Again, gang, if you are hearing this and you're the kind of person who completely gnashes your teeth when the market goes down a tiny bit, this is not for you. You should not be doing this. You have to know yourself. And if you think it's a fun thing and you want to just sort of get into this digital asset land, you want to see everybody else's library card and you want to just be part of something interesting or you want to learn something, I get that too. But as Dan says, you got to be careful.
Just quickly, Jill, I'll give you one last little soundbite I love about, whether to buy Bitcoin, how much to have. A buddy of mine who's a day trader, he said when there's something he owns, whether it's a stock, whatever it is, and it goes up and he wonders if he should sell, he asks himself, if it were to go down by 50%, would I buy more or would I puke? And if the answer is puke, then I should sell when it goes up.
Right. I like that. That's good. The puke factor. This is a good, we're going to call it the puke test, which is good. There you go. Well, thanks so much to Dan Roberts for coming on the program. Mark's going to put some links to Dan's work. It's so good. He does a great job of describing how you can understand this whole world of digital assets better. Hop onto JillOnMoney.com, click on the read link. You'll read the stuff I've written about Bitcoin, but also click on the listen link and you can get all the show notes. Okay? So we're going to take a quick break and come back and answer more of your questions.
If you've missed any part of a show or want to check out a past show, go to JillOnMoney.com for more great personal finance content.
You're back. It's Jill on Money. And if you can't get enough of that Bitcoin stuff, go to our website, JillOnMoney.com. I have a long article under the read section where you can kind of devour the whole Bitcoin thing. And check out some of Dan's work. It's really good stuff at Yahoo Finance. Mark will put throw a couple links in there. Okay, let's answer some more of your questions as we proceed here through this program. Molly writes about voluntary contributions, lump sum or annuity. Okay, so here's what's going on for Molly. In addition to my husband's regular pension, he made additional contributions that he can now take as a lump sum or convert the additional contributions to an annuity that pays an additional amount of money monthly. Question: in the long run, are we better off taking the lump sum or taking the steady annuity amount and hope that he outlives us? The lump sum scenario is this: he can take additional contributions he made as a lump sum and put it in his existing Vanguard IRA, traditional IRA. And he can also put some in the Vanguard Roth. Oh, I see why. Oof. This is really complicated because $54,000 of this money has already been taxed. And then there's $39,000 available in interest. In the annuity scenario, he would get about $511 monthly for the rest of his life. No survivor benefit. Ooh, I don't like that. You know what? I don't like this. I would do it as, okay, first of all, let's do it as a lump sum. And a couple of reasons why. I don't like the idea of just for someone's life only. I think that's always a bad deal, and it's very anxiety provoking. The other thing is I like the idea that we can now kind of separate the money properly, and so that he can have the previously taxed money in a Roth where it belongs, and then the almost $40,000 in an the traditional IRA rollover. That's great. Let's do that. Mark, do you agree? I just feel like having the straight life, as it's called, is always just makes me very nervous. Are you agreeing with that or not? I know we are both very nervous human beings, which is well, Mark maybe more than me, but about different things. Okay, Mark, you ready to do a little allocation question from one of my colleagues? Okay, so we just earlier talked about the folks who were basically uh, being piggish about their stock, their individual stock. Here is one of my colleagues who said that she was able to sell her restricted stock units, which says, thank you so much for encouraging me to do so. Okay. I opened up an account with Fidelity. Okay, that's good. And here is their suggestion for allocation. I had told her that she should be a little bit more balanced in this portfolio. So you ready for the allocation, Mark? She's 58. 35% in a stock market index fund. 50% in a short-term bond index, and then 15% international bond. No, I don't like that either. So what we want you to do is 35% stock market index, 15% international stock index. And then you want short-term bond or intermediate-term bond? You don't really need the money up front. Okay, so here's what we think. We think 35% stock market index, then 15% an international stock index through Fidelity. And then on the short-term bond, I might put 25% in the short-term bond and 25% in an intermediate-term bond. How about that? You like that, Mark? You think she should be 60-40 in stocks versus bonds? Well, okay. The other thing to consider then is to go a little bit more in the stock market. But she might need. I don't know. This is the first investing she's done outside of retirement. She's got about $750,000 in retirement, and she's 58. All right, I think we like that. I'm going to say 50-50. I think that's fine. I do. But like everyone is listening here and should know that. Being a little bit wimpy, especially your first time out of the gate, I think it's okay. I really do. I don't have any problem with that. And it's been interesting to watch so many people who go through they like have memory loss, Mark. It's like, she didn't even, I guess she didn't pay attention to the money back in March, because it was for her wasn't that much. So I think the total amount's going to be about 30,000 this first investment. So I think that, taking it easy for your first time investing outside of retirement is not the worst idea in the world. Okay. So good luck to my friend. And I will make sure that I email her right back with Mark's recommendations. You might know her. I'm not sure. But I'll tell you after the break, or I'll tell you during the break. Sorry. You're listening to Jill on Money. If you've got a financial question, send us an email. It's askjill@jillonmoney.com. We'll be right back. You're back. It's Jill on Money. And before we conclude our program today, just want to remind you that we are sponsored by Facet Wealth, facetwealth.com. Remember that Facet Wealth, there are no wealth or account minimums. You can just fire off an email, go talk to them. You don't have to have $1 million. You don't have to have more. You don't have less. It's all very easy to do. Check it out. No wealth or account minimums, goal-based financial planning from dedicated advisors. Check out facetwealth.com. Okay, last email. This is from Phil, who watched my segment about the potential stimulus that is brewing in D.C., and he says, I just watched you on CBS this morning. Thank you for providing information about the current stimulus. He says, I think it's great that lower paid income earners are receiving more assistance. He says that the assistance that people could be getting is more than he could get in a month on disability. He says, what about those that are on a fixed income? Well, listen, stimulus checks are issued to people, whether they are, depending, maybe they have Social Security, but also if you are on disability. So you probably could get a stimulus check. He says, I know it can't make everyone happy. Hearing the groups of all income levels getting more assistance just makes me wonder where those on a fixed income stand. It is true. It's tough because, to get extra unemployment, you have to actually be employed. But you might get more money out of certain things. There are certainly some expansion of the earned income tax credit for people who earn less, but you have to have earned income. So I don't know. Look, it's very difficult to, as you say, make everyone happy. But I suppose that hopefully you get that stimulus check and that'll help you out, at least in the near term. Okay. Thanks so much for listening. It's been a great program. If you have more questions about Bitcoin or anything else going on in your life, just send us an email. Ask Jill@jillonmoney.com. Our music is composed by Joel Goodman. Mark Talercio is our executive producer. We always want to remind you to wash your hands, to wear your masks, double up on those masks, maintain your physical distancing, and try to lift someone up today. It will make them feel better. It will make you feel better. We'll talk to you next weekend. Thanks for listening.